All right, guys. So when you're doing a double top, double bottom, we do use the indicators because it just makes it a lot easier to spot. But if you look right here, I have my indicator on, but at the same time, the double top hasn't emerged. But this is a clear classic double top. So if you see up here at the top, we have right here. All right, we have one touch, and then we come back up here and we touch again. So this is a double top right now. In order for me to get the neckline based off of this, is that I have to go into okay, where is the lowest point, the last lowest point of when price officially reversed, and so it's essentially right here. So what I'm gonna do is I'm gonna take a trend line and I'm gonna go here to there, right, and then I'm gonna do another one, and I'm gonna take it from here to there. So that's my top number two, and then essentially this is now your neckline right here. And so if we were to trade this double top, we're only looking to take the trade back down to the neckline. All right. Now, sometimes I don't actually just take it to the neckline. I actually take it back into some form of demand zone because price can get into this zone and it can reverse within the zone because this is a demand zone. So you see how price came out of this, came back in, pushed back out, pushed back in, and then pushed back out. All right. So price can come back in for another reload to push back up further. A lot of times, if you do the traditional targets, which is essentially you would take it from the top and then to the bottom, and then you would essentially move it down like this. This will be one of your traditional targets, and you'll be looking to take the trade down here. I don't trade like that, so I prefer just take it to the neckline. All right, look at this one over here. All right, so if you go back in time and let's do a bar replay back to this point. Let's go back right here. We got a what? We got a double bottom. Now, your double bottoms do not, or tops, it don't have to be perfect. So you see this bottom is a little lower. It's within range, so it's fine. But if we was trading this, I would only trade it back to here. I'm not trying to get up here. And you're gonna see exactly what happened. If you stayed in this trade, all right, okay, boom, our target's a hit, we're out. But if you try to stay in, or you try to do the traditional, which is once the neckline is broken, you wait for a retest to now try to go up to this level, you're getting ate up, right? So that's what most people do. But look what's happening. Look at that. Look at this. Like you're either now. Here's the thing: you can move your stop loss and the profit and hoping that it'll get up to this level. But of course, your stop loss got hit. You even went lower than what you originally got in at. So this one is somewhat obsolete. It's obsolete. But we as contrarians, we made money, so we're out of the trade. All right. So you see how that would look. All right, we just go ahead and get back to where we are right now. All right. So you do see, like I said, right now, this is a potential uh, double top, and we just basically you set how much you want to give yourself room. So sometimes I like to do 30 pips or so. So I set 30 pips stop loss above, and we'll just play this range, see if we can get back down. So that's typically how we play that. All right. So you see over here, there's another one, a double top that occurred. All right. So if you look at this, price came back up what here. All right. And here's this point. Now, so if you look, matter of fact, let's look at this one. So let me take the double top off. So you can see how the measurement was done. So we got this low point, we get up here, we fail, and then we get this here. So when I put this double top back on, they measured from here. I wouldn't have measured from there based off the indicator, right? Because that's not the lowest point. I need this. The lowest point needs to be the point where it now established either top or bottom number two. All right. So watch this. For me, this would have been. I just used this one. This would have been it right here. Right here. Whoa. Let's see. Here. All right, hold on. Let me take this off. Take this off. Let's do it like this. All right, here we go. All right, got one. So most people think this is two. This will be two. I mean, not two, but this would be the lowest, the midpoint or the neckline. Now this is two. This is peak number two. All right, of the double top. All right, and then we're gonna take it back to the neckline. We'll just start right here. All right. So this is the method that I would use. All right. So you see how it was different when the indicator, all right, the indicator used this as the neckline. When I use this one as the neckline. So that's something you just have to learn over time, in doing this, right? Let's try this one. Let's see. All right, so let's take this off. All right, so we got, yeah, we're up here. Price pulled back. All right, so we're back in range. Okay. And now we're looking for what? This is the neckline now. Take it back up to here. So we got a double bottom one, bottom two. All right. This established first point to be the neckline. We can draw something like this up there. Establish that neckline, and there you go. So once again, it doesn't have to be fully at the same level within this range. Now, typically, how you would take this particular type of trade is that you're looking for an engulfing bar. You're looking for the bar that establishes the top to be engulfed. And sometimes, if it gets too close like this, you're running out of real estate. So, what did I mean? I mean, this technically was the candle that created the second top. The problem is you don't get an engulfing bar. You're getting down to, you know, this area now. So this is on a 30-minute chart. And so a lot of times we want to try to find double tops and bottoms on a 4-hour chart to give us more room. All right. So yes, after this big candle right here, you probably would have even missed this trade for the most part. But if your indicator catches it, you can get in you can get an entry as soon as it creates it. So it's multiple rules. All right. Some people want to wait to an engulfing bar so they can be sure that we're going up into this direction, or some just go ahead and once the price comes back into this zone, they're good to go. And once again, this is a demand zone. So this is why we have to learn supply and demand levels. All it did was you take the high of this candle and the low of this candle, drag it across. When price comes back into this area, you're looking to start accumulating to go long, and then you're just going to take it back to the neckline. All right, we barely get back above the neckline, but eventually we roll back over, and then we stay within a range. So that's one of the ways that you can trade the double tops and double bottoms in these markets. All right, look at this one right here. All right, and I actually was in this trade. So last night, the actual indicator actually brought this one up, but it disappeared because it pulled down a little lower. So you see this area right here? This was a double bottom last night. The problem was um, So it was boom here, and this is what we were looking for to go here. All right. Problem was price gets here and then it rolled over. So my stop loss got hit. All right. So this was a double bottom. But if you look, the it took off. So I got wiped out, but then price did go into the direction that I felt like it was trying to get into. Sometimes that happens. So it is what it is. Oh, but here's the thing. I had a tight stop loss. I didn't have it at 30 pips. So if I would have left it at the 30 pips, it would have made more sense. But here's the reason why I cut the trade short. It's because my target, it didn't make sense. I was risking 30 pips and it wasn't enough pips, I believe, at the neckline at the time. I think we was right in. Let me see when this thing was. When did I get in? 7:30 last night. Okay, here it's around 9 some change. So I'm I'm literally I got in a little late because it already started moving. All right, and so I think it was around 24ish pips or whatever. It just the risk reward just wasn't making sense. You get what I'm saying? So you risk. So let's say I was using a dollar lot size. I mean, I'm risking $30 to make $24. It didn't make sense. Now I didn't think that it was going to do all this because I was only going for back to this level. But like I said, I was in profit, then it rolled against me, and I got knocked out the trade. So it is what it is. That happens, right? Um, but to me, I found that on the 4 hour time frame, it's a little better. It's a little clear. You see a lot. So like, look at this. This double bottom played out nicely. All right, even though we put down and we range bound and we finally hit this neckline, but that's a lot of pips and movement. You know, what I'm saying, to the downside. I mean, you got a 412, 415 pip drop, and and the targets are hit on the traditional. But once again, it's contrarian. We usually want to take it to the neckline. All right, got a double bottom right here. We get to the neckline. So all I'm showing you is that if you just go through on this chart, and this is way back in September. If we just start from September the 15th on, we got. And let's do this. We're just gonna. It's 234 pips. All right, it's 296. This is in October, and this is still in October. And you just saw we had 400 something pip drop. And down here, oh, sorry, for some change, 400. All right. So let's see, what was this? This is November. All right, so we got September, we got October. All right, what's it, September? Yeah, September, October, and November. So that's 3 months in a row. So let's do the math. All right, and let's just say you use a $5 lot size, or let's just do $3. Let's just keep it simple. All right, so you take 234 pips times when I say three. All right, so in September you made $702. All right, and then 296 times three, you made 888 in October, and then you did $1,200 in November. And let me see something. 234 times three, 702 plus 888 plus 1,200. All right, so in those 3 months, you made $2,790. That's not bad. Right? So this just using a $3 lot size. All right, so um, let's say you was using maybe a dollar lot size or whatnot. I believe you will for. Let me see. Let's do this. 400 plus 296 plus 234. Yep. So you'll make $930 if you just keep it simple with that. All right. That could be a nice little play money, go towards a bill, whatnot, right? So you see on the 4 hour, you get a little bit more. So I like personally to trade double tops on the 4 hours, more swing trading, and give yourself some room. All right. And then look, if you set your 30 pips, you're risking 30 pips to make 234 pips. You're risking 30 pips to make 296. You can risk 50. Yeah, I mean, of course, you're gonna have to make sure you have the account size to do this. But if you do 296, 30. All right, this is a 1 to 9 on this one. This is a 1 to 9 ratio using 30, meaning that you're risking $30 to make 9 times that. All right, this one right here, it's 1 to 13 for every dollar you're risking, you make 13 times that. Like that's a great risk reward ratio. So pay attention to that. All right. So this is what we will be learning in the trading academy. All right, we're going to be doing more like a gamified trading academy. We're going to have missions. All right, we're going out to solve it. You're also going to be learning contrarian. All right, that's the main thing. You will be learning how to be a contrarian, to do these things, to make things simple. We're going to be repeating these tasks over and over and over again. We meet about 3 days a week, only for like 45 minutes. We're not going to be in here forever. We're not going to do that. We're going to get the work in, we'll get in, we're going to get out, and we'll come back and we'll repeat this process. I am building out a certain portion on the website that we all can log in and we can upload our charts. All right, so I'll show you how to notate on the charts and stuff like that. The biggest thing with this trading academy, I'm not here to help you become a profitable trader. I'm here to help you become a contrarian. You know how to think, know how to process things. By default, my hope is that you will be profitable and you can do great things. But that's not the goal. I want you to get the money making aspect out of your mind and get the process oriented, because you have to get conditioned on how to do these things. All right. Even me, I still sometimes have bad habits, right? So in some of the bad habits, uh, you need to get back to basics, to the foundation, and it's following what you're supposed to do, right? Can you be systematic? Can you still do the same thing over and over and over and over again with no emotions dictating or second guessing yourself, right? So think about that. Um, yeah, here are the dates. We're going to start this Saturday on the 14th. All right. So this registration may end a little bit sooner, because if I got too many people signed up, it's not going to work, right? So don't mess around. Uh, some of you got till the day maybe, because this was supposed to end yesterday. I did leave it open. Look, this 6 weeks, guys, is only $75. So just think about that. But yeah, go to this page, go to the workshops page on the website. I will actually put this in the description, so you can get it on the website. So you can go straight there from YouTube. All right, and I have it there. But yeah, so we're gonna have a boot camp week. All right, the boot camp week is gonna be the most strenuous, but then after that, we just meet on Sunday, Mondays, and Wednesdays. All right. Um, on Sunday, it's gonna be a little bit of an hour, but then the other ones are 45 minutes, and it'll be at night. All right, 9 p.m. to 9:45. All right, we just want to get in that. So some of you got to work. You got some time to get home, relax a little bit, and we're just gonna do our missions. We're gonna get our repetitions in. All right. So hope to see you guys there. Hit the like button, subscribe. It's your boy E White. I'm out.